Orlando and Lake Nona. I hope everything is going well for you. Good morning, Lake Nona and Orlando. This is Alan Maycumber. Welcome back. We've got a great show today in reference to taxes. And when we talk about inheritance tax, and we're talking about capital gains tax, so really, really important. And I apologize for missing last week on my show, but we had a death in the family, and so we had to take care of that. So I appreciate your patience, and we're going to kind of go into it a little bit. I really think that this is a very important show because, again, when you get to a certain point in your life, you've got to deal with either capital gains or inheritance tax. And I'm going to go into a little bit of gift tax as well, but let's start with capital gains, because capital gains is so important. A lot of people get that confused with inheritance tax. At least a couple of my clients have in the past, and I'm like, no, totally different. Your capital gains has two assets to it. Your capital gains tax is a short-term capital gains and a long-term capital gains. So your short-term capital gains is anything that you own for less than a year. So if you are into real estate flipping or investing in something that you're going to turn around and sell within a year, you're going to have a capital gains tax on the price that you sell it for minus the basis plus your upgrades. Very, very important fact, because you want to make sure that you add everything you've done to the property up to that point. So on a short gain term of 1 year or less, you're looking at a 13% tax bracket. So when you're looking at what you're going to make out of that, you've got to deduct that 13% on a short-term capital gains tax. Very, very important. So if you take your basis of what you bought it for, and then you add on all the upgrades that you did to that, and then you sell it, then you subtract those two, that's what you're going to get your 13% capital gains tax on. So very, very important. Now the second phase of that is long-term capital gains. And long-term capital gains is anything that you own over 1 year. Whether you own it a year and 1 day or you own it 30 years. It's not going to matter at that point. And that is why the 1031s come into play so much for the big time investors. A long-term capital gains is the exact same formula they use. It's what you sell it for minus the base plus upgrades. But your long-term capital gains tax is 20% today. Now, you might not think that's a big deal. You might say, oh, well, 20%. But think in the big picture of things. Say you buy a property for $200,000 and 20 years later you sell it for $2 million. And say you put in $200,000, maybe you put in $250,000. Well, now you've got a basis of $500,000. You sold it for $2 million. You've got $1.5 million that you're going to get taxed, a 20% tax on that for long-term capital gains. It adds up. The money does add up. So short-term gains are 1 year or less. Long-term gains are a year or more. And you're going to look at 20% for long-term capital gains. So how do we avoid the capital gains? Easiest question to answer is a 1031 exchange. 1031 is buying a like-kind property, whether it be a investment property, apartments, land, it doesn't matter. It's got to be a like-kind property. You can't do this with your single-family residence, only investment property. So if you're looking at that, you want to do a 1031 exchange. That way it wipes out capital gains completely until you sell that next asset. Very, very important. Normally you wouldn't do this with a short-term capital gains unless it's something just very, very expensive, because again, short-term capital gains is 13%. If you were buying something that's $5 million for short-term, yes, and making 7 or 8 million out of it, yes, you'd want to do that. But there's certain guidelines on a 1031 that you need to talk to a professional about. because very tight time frames on a 1031. And if you lose out by 1 day on a 1031 and miss those guidelines, you're done. You can't qualify, so therefore you got to pay the tax. And those guidelines basically are, you have 45 days to choose 3 properties that you want to buy after your property closes, and you have 180 days to close on those. But there's certain guidelines. You have to let the seller know that it's a 1031 exchange and you've picked your 3 properties. So a lot of times sellers are a little weary saying, oh, I don't know if it's my property he's going to pick or it's somebody else's property going to pick. That's just the way it goes. So the best way to do it is work with a professional that already has capital or already has those type of properties in stock. So we already know that they're a 1031 exchange. But anyway, that goes into your short-term and long-term capital gains tax. Now I want to get into the big one, which is inheritance tax, or quote-unquote death tax. And when we're talking about that, I just did a lot of research on that, and there's good news and there's bad news on both sides of that. Your inheritance tax right now in the state of Florida is 0. You have a 0 death tax and a 0 inheritance tax in the state of Florida, as well in the state of Arizona, and there's several other states. Not all states are like that. A lot of northern states, you actually have an inheritance tax that can run up to 40%. So big deal. If you own investment properties in Florida, you don't have an inheritance tax, which is very important. But there are other states that have up to 40%. So if you have a asset that you're selling for $5 million, well, you can give, if you're in one of those states, I guess you're going to give 40% to the government, because there is no way to get out of that. Now, there is no way you can do a 1031 or anything like that. So that's why a lot of people are keeping their assets on a regular basis and continually turning them over in 1031s, so there are no capital gains and you're not selling property. A very important tax benefit for you if you're an investor or if you have any type of investment property in the state of Florida. There is no inheritance tax and no death tax. So I wanted to get that across on our show today. And if you have any questions, you know where to reach me. I'm with Premier Sotheby's in Orlando. You can reach me at 407-251-1314. You can reach me on my website, alan.maycumber@premiersotheby's.com. And you can also reach me by email. My website is alanmaycumber@premiersotheby's.com, and my email is alan.maycumber@premiersotheby's.com. So you can reach me anyway. Get on my website, check it out. This information will be on there. It'll also be on YouTube if you want to re-listen to this segment. So important for taxes. So I look forward to next week, and we'll be back with you. And I want you guys to have a great rest of your week. We look forward to it. Give me a call, like my page, and also like YouTube and subscribe. Thanks again. Have a great day.